do it.
Okay, 5, 4, 3, 2, 1. Wait, what's this called? Big announcement coming soon? Yeah, 5, 4, 3, 2, 1. Welcome to the Big Announcement Coming Soon podcast. I'm Michael Bull, joined today by the usual gang of 4, as they used to say in China, Jeff, Nick, and David. Gentlemen, great to see you again.
I'm out. If that's our intro.
Well, I did live in China, so I have an excuse, I guess. But so, I guess should we just recognize that David predicted 21K last week, and like 3 days in, it was 21K.
Play the financial, not financial advice video, and I'm gonna go with 26 next week.
26. Dang, you're on a roll. Okay.
Yeah, it's nice to have a whale on the podcast, right?
David's our whale.
I'm not a whale.
the market mover.
He's gonna be a whale at some point.
Calling a shot.
Are you feeling whaley?
Yeah, of course. I sing my whale song before I go to bed. That's what's doing it.
Okay, there we go. Yeah, it's supposed to be a nice tune, I imagine. All right, should we jump right to it? So we're starting with you today, Nick. You've got Web3 identity theft. CryptoNovo is hacked and then backed by his community. What is that talking about? I'm confused. How can you be hacked and unhacked?
Well, I mean, that's the power of network, right? And what we have here is another story, pretty much old as time. Everybody who has, been on Twitter has come across someone who's clicked a link. Unfortunately, in this case, this happened. I mean, I did it myself about 6 months back. There's scammers all throughout Twitter that pose as the same account.
Well, and this one was an OBS download that was an ad sponsor above the real OBS link on Google Chrome or Google Search. So it wasn't even like an NFT specific hack.
Yeah,
it was
like
just a hack that's out there for his computer, and then they realized they had access to all his stuff.
I thought Elon was going to take care of that, but go on, Nick.
No, well, it's just like what it really amounted to was an outpouring from the CryptoPunks community and those who follow CryptoNovo. I mean, we spend a lot of time talking about Punk 6529, but there are other, like really good cornerstones of the NFT movement or the Web3 movement, and they're trying to do good. They're trying to educate, they're trying to inform, trying to keep people safe. So when somebody sees like one of their people go down, they rallied around it, and what they did was they raised up about 75 Ethereum through a GoFundMe account, and they ended up bought the CryptoPunk back from the scammer. It's a pretty incredible story. It just shows you the silver lining of all of this. I mean, we're in a bear market still, right? I mean, David's moving the market, but I mean, we're technically all still searching for liquidity. And here you have a community who raises 75 ETH to help a person get something that was stolen from them back. So that's neat. And it's what's really cool about it is it's coming from the publication Red Lion, and Red Lion is a magazine that comes out every week, and Jeff and I are going to be doing something with them next week. So hopefully we'll talk a bit more about them.
That's exciting. Is this going to be another sponsor?
No, this is our just NFT side project. You guys are not cut in on that.
More of a one night.
I mean, we've got SEKAI as a sponsor now. Red Lion's going to become a sponsor. Who knew that you could just 4 dudes could get together and make things happen? Of course, I'm just the one talking first, but
that's how you move markets.
Yes.
Red Lion is more of a one night stand, I think. But do check out the article. It's a cover story this week. Look at it.
And I think this is not a news story, but between the hack and then things getting returned, I know Nick, you got a lot of support when things got stolen from the small community. I've done stuff like buying before it was part of Uniswap on Genie XYZ. If you sweep a floor and you end up with 2 stolen NFTs, and you contact the person and send them back, because at least for me, it was like floors of the communities I'm already in, and I didn't know these specific people, but then it restarted that conversation of like, before I send this back, what's your wallet situation? Do you have everything secure? Do you have a clean wallet? And then just those 2 that we've been with, and I've seen this tons of times in tons of Discords, the community part, and David talked about this last week and how big it is. It's there. Like, people are just spending their own money to give strangers back stolen property to pay the scammer.
Right.
Like in the real world, people would be like, oh, well, that's unfortunate. And that'd be like to your real life friends and colleagues. but to
who you
spend
meet
money
and who you see.
anonymously
Yeah.
is pretty
Yeah.
powerful.
Agreed. And again, like, when I got hacked, I called you immediately, Jeff, and you taught me a lot. And these are powerful lessons. I mean, it comes with digital literacy, it comes with the importance of understanding self-custody. And I think in terms when I got hacked, right? You were like, check your Twitter, check your backdoor, check your Google Drive, check every other way, clear everything to see how people could get in from third-party accounts, from those little
Hmm.
permissionless places that you do from apps that you just use, habitually.
The three
That
AP, the three something API that was hacked with Binance a couple weeks ago. Um,
3 commas,
Three commas.
mm,
Yeah, that's another one.
Comas or commas?
commas.
And then if you saw the Peter McCormick thread this morning of um, buy a hardware wallet, buy a Bitcoin, teach someone about Bitcoin, back up your seed phrase in Google Docs.
right.
And he's like, where did they go wrong? And I mean, everyone's joking on the thread, but people do that. And they're like, well, I'm an expert in this. I'm like, well, are you expert in Google Docs getting hacked? I'm like, well, my email is fine. I'm like, dude, and you have to have
Yeah,
so many
yeah.
areas of expertise, right? We said this
Right.
guy got hacked through an OBS download, not through like a crypto Discord scam where if someone DMs you on Discord, you go, okay, this is a scam. If you
Yeah,
go
it
That's
to
wasn't
right.
so much a phishing
download a
attack.
program
Right.
that's
Like
not an
me. Yeah.
NFT or crypto program, it's not in your mind that OBS is going to have this kind of Trojan in it.
So there's two ways to look at. One is that I don't think it's so unique that people help a community. When you're in a community, you help a community. So it just happens to be this is a NFT type community. There's also the maximum of you don't negotiate with hostage takers. So it only
Yeah.
encourages it. But we shouldn't knock the fact that
Yes,
everybody's feeling good that they
yeah.
were in a community.
It's still
That's something you
it,
say, and then you send prisoners back and forth, and you negotiate with all the hostage
I know, but you
takers.
secretly do it supposedly.
but it's also transparent on the blockchain, right? So you can rally around and,
Hmm.
burn the scammer at the stake because it's all there. It's all transparent,
That's true. That is a unique way to look at it. It's not like hostage takers in the regular world are out there and have a network, a spreadsheet that shows who they're taking, where they
Yeah.
come from, and all that kind of stuff.
I love that
And
analogy.
that would be kind of cool. All right, shall we move on? I think we're supposed to talk about. David says, "Will the Fed get their soft landing?" And interest rates ticked down a little bit, so we're all super excited. And we're all super excited basically on 1 month's information. But David, is this true? That's it. We're going to softly land.
No, no. The article is misleading, so it's probably like clickbait to encourage people to come and join it. So that has
So
two sides to the argument. You've got Jeff Schneider and you've got Bob Elliott, and both are good macro people, but Jeff Schneider's kind of a goat. He's dedicated his life to studying the Fed. His perspective is very much more, I guess, dire than that. So essentially, like his argument is that inflation actually was transitory. Um, and it just wasn't 6 months transitory; it's more like 18 months transitory.
how
So,
do you define transitory? Like
like
if I'm
temporary.
cheating on my wife and I cheat on her for 3 days, it's like, oh, that was transitory. But this sounds like I can go 18 months now.
It eventually
Well, yeah,
stopped.
here would be how it would work, right? So essentially, during COVID, what they did is they just injected all this money into the stock markets, or into everybody's wallets, actually,
Oh,
right?
the good old
Everyone got all
days.
this money, and so what that did was it took the demand curve and it just shifted it sideways, while the supply curve remained the same, or actually went down because there were supply shocks happening. As a result, you saw just a takeoff in prices because there
Here.
weren't enough goods to the amount of demand that was created. As a result, it inflated. And then kind of what you start to see now is everybody's savings have gone down, all their credit cards have gone up, and you're starting to see inflation come off. And the argument would be that was going to happen anyway after that money kind of flushed its way through the system. They spent it on and stuff like that. And as a result, what's happening with these inflation rate hikes is extra on top of that. And so right now everyone's kind of celebrating, oh yeah, inflation's coming down. This is exciting. And there's kind of starting a mini bull rally, which will probably continue, hopefully anyway, for the next month or two. But then after that, what happens if inflation prints like 4% and then 3% and then 2% and then 1% or quicker than that? Then everyone starts freaking out because they're like, wait a minute, we've just killed the economy. Oh my gosh. And then
Yeah, but what are the odds of that happening? That would be a massive shift. You're talking a short period of time.
So here's the
is there
evidence,
a
right? So
historical narrative for that?
yeah, absolutely.
Mhm.
So there are two kind of key elements of it. There's the 10 and 2 and the 10 and 3 year bond, treasury bond. Treasury yield, sorry. And that is a bet that the rate will be higher in 3 years or higher in 10 years,
Mm-hmm.
or yeah, whatever. And they've inverted massively all across the world. And you don't really need to know too much about it other than the fact that every time that has happened in history, forever, with no other, option, like, no excuse, it has caused a recession, and a deep one.
And
Mm.
when you say inverted, you're talking YCC, which is yield curve
Curve.
control, and you're saying inverted, the 3 year or the 3 month pays more than the 10 year percentage
Mhm.
wise. So you want to buy short term ones, and really that's driven by they want you're putting your money in short term so you can take it out and spend it again rather than those
Yeah,
long
because you
term.
believe that it's about to crash. And so
Your
essentially
money's
what
going to be
what is
worth
happening
less soon.
exactly. And so
Okay.
the bet really is the market right, or is the Fed right? And if you look at the Fed's record over time, it's quite interesting seeing people think that the Fed's going to be right, because they're almost always like late. Um, but the 3 and 10 is never not true. Like it always happens, whether the recession happens, 18 months later or 6 months later or whatever it is, but it always happens because it basically is showing you where the trillionaires are putting their money, and they're not putting their money into long-term development. They're putting it into
Right.
short-term.
So
And so
how's it
like Hmm?
how's this different than so you guys are too young to remember this, but I remember the interest rates back in the 80s, in the early
Hmm.
80s, when my parents freaking out buying a house at 15% interest rates. So
Hmm.
and the thought then was that the Fed was too slow and they finally hiked the rates later on, that they were too slow to
Hmm.
do it. So how is this different? I mean, it seems like that's what Powell's learned, those lessons, is hiking rates fast. So how is
Yeah,
this different than
exactly.
then?
Well, it's different than them because they're basically reacting to a false scenario. Like the scenario that's been created is all this massive inflation, and they had to hike aggressively into it,
Right.
fearing that inflation is going up. But actually, it is actually transitory inflation. So they're actually hiking. And if you look at what the data has been doing over time, so here's a good one then. So if you look at like hiring stats, so you're like,
Sure.
oh, the labor market is tight. It's like so full of people. Like
Right.
there's no jobs. Or sorry, there's no jobs, or there's lots of jobs and nobody wanting them. But
Mm.
actually, if you look at like 2020, the exact same amount of people employed now are employed as were in 2020. And so you
Hmm.
have lost 3 years of growth, which should be 1.5 million people each year growing in your economy. And so it's come back strongly now, but there's so many people not participating in the market because of various reasons that it's
Right.
actually not supportive of this being an inflationary environment. In fact, it's actually supportive of being very much a big problem, because people aren't coming back into the workforce,
Right. You got
because
50
largely
plus,
because they
you got
can't find
50-year-olds
the
like
right
me
jobs.
who are coming back in, just
Well,
working on our own.
so
Sure, yeah, yeah.
economics, the basis of economics is the rational consumer, right? Supply and demand, people will do what's the greatest
Hmm.
utility to them. And after 2008 financial crisis, we went right back to it. We didn't
Yeah.
change the responsible consumer. We didn't. There was none.
No, we juiced it. We said, keep
We
going, keep
yeah,
risking. And then
but
they
but
got used to doing
True.
that. Yeah.
COVID wasn't a
True.
financial. I mean, it was, but people stayed at home. Lifestyles shifted. Not just the
Hmm.
2008 finances shifted.
Yeah.
Now people finally have an outside real kick in the pants to do something different financially, and it might not even be a financial response. It might have been choosing lifestyle over work, or where you want to live, or you're recovering from hardships from COVID. There's a lot more than just a housing crash that went on mentally, I think, for people.
Right.
And that's going to
Yeah.
factor into it's not just can I
And
find a job? Do I want a job? Was not a
that's
question
exactly
last
it.
I
crash.
mean,
And
I
and
think.
that's exactly it. Well, sorry, you're next.
Oh, no, no, sorry, real quick. I just think what you're talking about is like when anyone becomes an outlier of a situation for whatever reason, they start to look for alternatives, and it no longer becomes that
Mhm.
not risky, or like there's not much like fear to go down that new path or to make your own way, right? After you become an outlier, because at one point, like, it's like you were banished from the tribe, or you've done something, or you've been like so knocked off course from
Mhm.
whatever happened that you tried to do traditionally, that you look for alternatives. I mean, it's I think it's kind of, human
And,
nature.
and also, I think you adapt your life, and I think it's the thing for productivity that really matters. Is like if you think about spending behavior and kind of like animal spirits in 2020, people going out and buying stuff and like whatever. And now people are like, yeah, maybe I don't need to work and I'll just spend a little
Mm,
less and live at home or whatever it is.
Mhm.
That's terrible for the economy, right? Because that
yeah.
they depend on that coming back. And so if that's what people are doing, and the inflation was super high and now it's coming down, the fear is that it's just going like this now, and people are like, oh, it's actually just going to go like this, is maybe even a soft landing, but it's not going to be at
Right.
all.
It's interesting, but I mean, you have to have that skill set in order to be like. So we have four of us here, and Nick's the only one with a real job. The rest of us are just have opinions.
But does that mean like you guys already made it? Like, what are you saying there,
No,
Mike?
no, I don't know if we have. I wouldn't say
No, what it
it's
shows
still
is
time
that
to hustle.
there's
But
slack in the economy. A lot of
but it
people
shows, but we have
still
that.
have a lot of money to
Yeah.
spend on kind of not having jobs, and as a
Mm.
result, the economy needs to go
The one
down.
particular group, the group that has that skill set. I mean, if I have,
And that's what he
if I
says
actually
also.
work for a living at a wage, I'm hosed.
Yeah,
But
there's two sections, and everyone kind of treats the economy as one. And then I saw a tweet recently of someone's like, the recession's going, everyone has no money for eggs. And I'm like, yeah, okay. But the people selling ridiculously overpriced eggs are making bank. So there's
Sure.
like two
right,
different economies we're talking about. One is not going to have a
right,
problem with recession at all. They're making heaps of cash. It's the poor people who suffer from a
Yeah.
recession. And
yeah,
so
again,
And they suffer
what
from interest
happens
rates.
with yeah, and so
Yeah.
you'll have like right now ridiculous inflation happening and because of rich people spending money on like travel or whatever. But then you like dig deeper into the numbers and you're looking at people starting to lose their houses and start and when
Mm.
that starts to roll, how do you get people back in? They really have to reach desperation
Yeah.
point, really.
And Mike, I think
Yeah.
your point about us is pretty true, but we all quit coming out of COVID. I mean, I know you were on
Yeah.
more of a retirement side of life, even though you're still pretty young. For David and I don't know that if there hadn't been COVID and certain disruptions to our work, we were both working in tech at schools.
Mm.
Um, would we have taken mentally the same path, or would we have continued to work longer part time
You might have.
because of the world situation, not the financial situation?
Right,
Right.
That's a good point.
That's an interesting point. Okay, well, speaking of not having a real job, we should move on to Jeff here, who's going to tell us about SEKAI.
Yeah. So even
Wasn't that a great segue? You like that?
yeah,
yeah, we have our job. Me and David work for SEKAI. We are raising, and then one day we'll get paid. We have a new partnership with KBC, which is Kraft Biochain, and this is looking at
So wait,
coffee.
mac and cheese now in SEKAI.
Coffee.
Coffee.
But
Oh,
we
of
could
course.
do
Oh,
cheese and
Kraft
we
with
can do
with
macaroni with it too. Like that. I mean, all of that fits in. This is
what?
right. You're in the startup phase. You're open to ideas.
Yeah,
Well,
microwave it all, whatever.
and this more so we have the platform and KBC is the person building on our platform. So it's they're looking at supply chain between Brazil and Switzerland, and some universities and governments are working on this. The more important thing
Nice.
is the Sakai layer that David and I are working on is sorry, the business to consumer, the open layer. So
Okay.
there is a business to business side of Sakai doing other work for people, and that stays
Right.
private.
And a quick reminder, SEKAI is able to get real-time data that's going on in various things, let's say transportation around the world.
Yeah, all
And
that.
so that if I had
data
a
into
business
the
that was
metaverse.
into something transportation related, just as an example, I could see the real-time data and come up with a cool idea. But how's that going to work on the consumer side?
You just gave me that perfect segue. Well, for the consumer, it's really, and I'll get there in a second, about SDGs, transparency, and knowing your customer, knowing your business.
Okay.
Like you said, sorry, with the supply side, I've got you set me off in my notes, but the shipping, the rail data is there. The coffee production data is now being added to it through
Mhm.
KBC. And the open side means somebody else could come and look at all three of those systems and find optimizations between them. Because right now they would be federated, right? Different people keep that data. We're saying here's an open platform
Yeah.
to load it onto, and also
Siloed. You
here
say federated, but basically you mean siloed.
siloed.
Right.
Yeah. So we're
Okay.
unsiloing and then bringing it together so people not involved in the rail systems, not involved in the coffee supply, can say this is a way to change some stuff up. Looking at probably the best and easiest example, trains run until they have their own stop, and ships do their own thing. When a train gets to the end, right, it just waits for the ship to arrive. When you start and stop a train at every stop or every crossing, it takes a lot of energy.
Mhm.
If we can run the train a lot slower, so it just runs continuously and never stops, because we can see how it interacts with traffic systems, and
Gotcha.
also we don't need to beat the ship there because we can now integrate the ship's schedule with the train. We could run it at 30K an hour, slower, more efficiently, not starting and stopping. But that's between the systems because the coffee is now on that. The openness of our version of Sakai is for people to come in and create those logic patterns and say, this is a way to add value to the world. And just like our last discussion with the whole world of economics, production, and how do you extract more value without, right? We can't dig more out of the earth. We're not creating, what are we doing that's new to create more value? And this kind of optimization is one that we haven't really tapped into.
So it's efficiency. So you're looking to create
Yeah.
efficiencies. And the problem is that the data that you need is disparate right now. And it's SEKAI's idea is that they're going to bring it all together.
Yep.
Incentivize people to share that data.
Yeah, it's worth more to have it shared than it is to have it on your own, because more people can look at it and offer value and then mint that value as an NFT and pay them, and that's more than
Right.
mechanics.
From a meta point of view, the individual often doesn't feel that way, but
It's like Wikipedia, if you will. If Wikipedia, you got paid for the pages you make and things like that, and so it takes the approach of like people would say, oh, Wikipedia will never work at the beginning, and then it kind of blew it out of the water because of efficiency. And I think there's a really interesting theory or like study right now called by Jeremy Rifkin called the third industrial revolution, and essentially one of the really key points is that all of society reaches a level of efficiency under certain models and it can't get past it. So for example, way back in like the industrial revolution, where you were just like pulling oil out of the ground and creating kerosene and burning off the oil, you were getting like 3% efficiency or something. Well, now we've got to the stage of refining oil or whatever, and now it's like super efficient. They've done measures on it, and essentially like the most efficient country at the world at one point was Japan, and it was reaching 20% efficiency, and the rest was wasted. And America's at 14, and then you've got like
And the
less
wasted
developed
being like
countries.
heat and all that other stuff that's like physical and friction, but you take the money to extract the oil, what do you actually get in the end is what
Yeah,
you're saying.
the
It's not like
final
it's like they're
product.
wasting the oil, but it's the rest of the
Yeah,
economy that
it's
goes
a
into it.
exactly. And so as you build higher tier products, it takes that level of efficiency is kind of a coefficient of like what it takes to pull it out of the ground, how efficient your team are, how much they get paid, all that stuff. But basically, the current model has reached a cap where it doesn't get higher anymore. It hasn't for years, decades actually. And so if you actually want to get more efficient in the world, if you want to do more with your resources, and we need to solve global warming, inequalities, things like that, you have to actually do it differently, not more of it, if you will. And so this is kind of an approach to try and do that.
And then Anna, you said like solve global warming. The other thing that KBC is doing and we're trying to promote with our platform is if you're meeting your sustainable development goals, or in the US you have stuff like LEED standards or WELL standards that show your company is, has green initiatives, takes care of its workers. All of this is self-reported, or you have somebody visit, and my brother said he writes up hours of reports every year for his architecture business. What we're going to do with IoT is you can see the data, you can see the emissions, you can see what they're doing, and you can share if you're meeting these SDG goals, because more so than actually meeting them for the regulators and the government, consumers are making choices based on this, right? It started, the first one I remember was Tom's shoes. You buy a pair of shoes, they send one to somebody in poverty, and people choose more and more what they consume based on the back end of what is this company, where am I sending my dollars? And this is a way we've seen companies promote data that says things and then they realize and it's all been a lie. This is a trustless thing where the data is just published up there. It's not in the hands of anybody else to manipulate. So if you're going to be taking the efforts to meet these SDG goals, it should be shared in this trustless way, and you should get credit for meeting these goals. And that's what KBC is doing.
This business? You said this is business to consumer. How's it? It sounds like business to business with the benefit to the consumer, like any business to business. How's this different?
It's
the business to consumer being consumers can come into this side of the metaverse. Our SEKAI business to business side is not open for people to come and explore. That's businesses doing private work with digital twins on their own systems. This is open for you to visit and open for you to upload to the same metaverse if you want to start looking at this data. So KBC is sharing with us, us
like
meaning
Google Earth.
sharing with you.
Got it.
Users.
Google Earth. Okay, got it. That makes sense.
So yeah, so it's that efficiency part and then that transparency for sharing your green initiatives.
Okay.
And getting a good cup of Joe at the end of it all. Right? Cup of Joe, coffee.
So this is good. See, for me, I see this actually as a useful way of crypto, or not crypto, but excuse me, the whole blockchain concept. That actually seems like something that has some value and some use versus all the speculation that we do to try to make a few bucks.
Yeah, we hope so, for sure. I mean, that's essentially like why we're raising an equity, and the whole token is a force multiplier of the system, not a critical part of it. If you never want to interact with the token,
so it's essentially a vehicle to raise equity without having to go through all the compliance and all the various markets and various parts of the world.
Oh no, we're raising with equity.
Yeah, we pulled the token later because you're right. A lot of tokens come out as a predatory dump.
Right. No, but I mean, but you're bypassing, right, all the regulatory requirements in zillions of countries around the world if
No,
you
no,
wanted
no.
to use
We're
SKY
a
data.
Swiss-based company launching
Uh-huh.
equity
Yeah.
in Swiss,
I
real
think, Mike, you're
company, all
saying
that
Okay.
stuff.
if some random person chooses to launch a token, you can raise money. What we're doing is holding the token back because it does have use in governance and taxes within the system. But
Okay.
rather than using it as a kind of a predatory dump on people as a hypothetical, give us money, when the token comes, it will be right. The system works after we have more users. Then it's time to introduce the token. Otherwise, like David said, we're not trying to dump tokens on people. We're trying to create tokens
Right.
to eventually move to a
Okay.
DAO
So
and a
I
tax
misunderstood.
system.
So you're actually incentivizing to
Yeah,
make a real
we're holding
system and
back
get the
to
token
not.
after rather than get the money through the token
Yeah,
up
it's
front
like
and then be like, well, I should just take off. I'm rich.
yeah.
Yeah.
It's like a BNB token. You get discounts on trading and things like that. So if you're
Okay.
a user of the system, it pays to hold it. And if you're not, then it's
Okay, cool.
most-
All right, can we finish up probably with my article here from, because I'm such an institutionalist from the New York Times, of course, and it's from Dr. Desai, who is a professor at Harvard Business School and Harvard Law School as well. And, he basically says that the crypto collapse and the end of magical thinking that infected capitalism. And here's my favorite quote. The end of magical thinking is upon us as cryptocurrencies and valuations are collapsing. Braden, or David, are you?
Oh no, oh
Yeah.
no.
I've
And
never
that he
heard
says
this
it's
Harvard
before.
is telling us it's over.
Well, I think he's got a point here. He says that's good news that it's ending. Vested interests will resist the trend by continuing to propagate fictions, us, but rising rates and a return to more routine business cycles will continue to provide the rude awakening that began in 2022. So basically, the whole thing is BS. So we don't really need it as a store of value, and we're just speculating
Quick
on it,
question,
trying to make some cash.
Mike.
Dang
Did
it.
they
I just
publish this?
actually
Hold
they
on.
wasted so much
How
of
is
my
that
time.
wrong?
Is this a 2012 article, a 2013 article, from 2015, 2017, 2018? They didn't write any in 20 or 21 when it was
Yeah, no,
going up.
I know, but there's so much more money in the system. I agree.
Yeah.
You got in early, and that's where you guys were. You're like, "Woo, this is a
No,
great
I'm
ride."
wondering when was the
And I'm
article
joining your
written because I've read this
significant
article
headcount.
like 45 times.
Yeah, I know.
More than that. It started
Uh,
more. Jeff, you have the graphic that you can probably put up in post about like it looks like a video game cheat code where it's literally like up, up, down.
I don't know how this guy is wrong though. Now that it's going
You've seen
into
that.
into the mainstream, how is this person wrong?
So, I mean, I would argue that it's very interesting when you look at crypto, you often see it from a Western perspective. Like right now, I would argue if you're a Bitcoin investor, you're like, wow, look at the world economy collapsing in terms of interest rates going to 1,000,000%. Like, so if you're Turkish, if you're Argentinian, like your rates are going up a whole lot, like 90%, I think, and then your inflation rate is 90% as well. So not rate, sorry. Your money is going down 9%, your inflation rate is going up. So you actually start to see a lot of the instability playing out across the globe. Plus, everyone around the globe is getting angry about America being like the reserve currency and stuff. And so, whether this actually leads to a bull run in Bitcoin right now, and it certainly to me makes the case for there being a need for sovereign digital gold, because people want it, just like there's a reason to have gold even though there's money, right? Because
And
people still want it because they don't actually inherently trust at the same level that we have been trained to trust. Like we trust the Western everything, well, until recently, a
What's
lot.
the alternative?
But
Yeah.
well, yeah, exactly. But then a lot of stuff that start to be, impossible, has become possible. Like I would have never thought we'd be so in debt and we could just print money in trillions of dollars every year.
Right.
That just wasn't a
Mhm.
possibility 10, 15 years ago. People would laugh at you.
And Mike,
So
you said
everything
the
starts to
article back to
change.
normal, and that's what David's saying. Do you mean back to normal, like print tons of money, bail out banks?
No, it doesn't talk about that. It just talks about
No,
how.
but the phrase "back to
Like,
normal, business as
yeah,
usual."
back to normal. Just
This is somebody with legacy, right? They're entrenched. They have benefits from it. They write for the New York Times.
yeah.
They
And
want their
he
system
works at
back.
Harvard
They don't
Business
want
School, et
fair
cetera.
things. They don't want the future. They said
I mean, the
back to
fair
normal.
things.
So
Things are only that's such a BS that it's going to be fair.
I don't think
Always
it's so
be
much.
captured.
but, okay,
I
not
don't know.
already
Listen,
set up through regulation to be unfair with things like the way banking regulation is set up, that it's already rigged. At least we can start clean and re-rig it.
It's
Okay,
more like you're
yeah, but at
comfortable.
least you have a little bit of more influence on the current rigging system if you're
Everyone is
richer.
comfortable with what they're in, and then and when you're in something new, everyone reacts kind of the same way. Like when I first heard of Bitcoin in like 2014, it was like $400. I was like, what a ridiculous joke or whatever. And then I just trashed it a lot, and then I got around to it, and now I'm a super believer. So it's kind of like any new idea is super hard to accept to begin with. And I think
Yeah, I understand that theory and that logic, but I think maybe we're a super speculator. But we should have Nick finish us
Sure,
off
yeah.
here in the last one.
But that's it. That's it. It's as simple as that. I think it's just like it's nothing has changed. It goes up, it goes down. I mean, maybe we can incorporate that video where it's like I bought Bitcoin at 26 cents and it went up to $1, then it crashed, right? We've all seen it where he's forever he's just talking about this. It's just been amplified. It's just under a magnuscope, like
Microscope.
magnified glass.
Micro,
It's
yeah.
under, oh, yeah, well, a macro. It's under a macroscope.
Go.
Yeah.
But no, honestly, like I just think it's just like the news, right? Like not more shit's happening in the world. It's just we have more access to the information, and that's what happens when we bring more people along. Like it gets more speculative. And
All right, we only got about 10 seconds left, so let's finish it off there. David, will you shout out your number for next week?
Yeah, totally. I'm gonna go with 26.
Okay, gentlemen, 26 it is. We'll see, and we'll talk to you guys.
We have
next
two
week.
minutes left. 2 minutes left.
Oh, do we?
No, if it's 26, we're
Well, I'm
done
looking at the
with
wrong
podcast.
clock.
Yeah.
Oh, you're right.
Yeah,
We do have 2
two-
minutes and 19 seconds.
Yeah,
Oh,
we got some time for predictions. 26.
But Mike has
26.
a point. If it's Mike has a point. If it's 26, we're all done with this podcast. So
No. That's just the first
Yeah.
stop on the way.
What else am I supposed to do if we don't do the podcast?
does this mean I can upgrade my flights now so I can actually pick a seat?
Yes. And also, this is a healthy release for me refreshing my Delta Blockfolio thing. So
There you
that's
go.
good.
what do you think it's going to be, Mike?
I know enough to know that I don't know anything, but because I'm like, oh yeah, it's gonna be 26, but that's just my bias and optimism and my gambling instincts coming in or being kicked in.
Yeah, yesterday I would have said 18, but today I guess more I don't know. People are talking about
vertical accumulation.
Yes, but
Learn about
spot
it. It's
selling,
happening.
open interest is growing. I'm like, okay, so the longs have to crash. I don't. Usually the longs would crash, but now they're saying it's a good thing.
Now,
23.
that's a not gonna make it attitude. It's up only from now on.
That's why I bought my Bitcoin below 18 and below 22, and I'm not trading it because no matter what we say week to week, not a trader.
Yeah, agreed.
Position. Hold.
Hold and pray.
Yes.
All right, gentlemen, we'll see all of you guys next week.
Yeah,
Good
party
guys.
on.
6K
Good,
record.
everyone.
Okay.
Thanks.
All right.
Bye.
See ya.